We've got tons of production news this week out of Tesla. Are the Saudis propping up Lucid stock? Nikola's still in the news, and we'll run over the technicals from all the major EV stocks. What is going on, investors? Hopefully, you guys are doing well out there. That's right, it's Saturday. It is time to go over the EV stock show. First thing I want to point out is we are on, I wouldn't say necessarily the eve of earnings, but we've got earnings coming up with a lot of these companies, and especially the ones that are kind of pre-revenue, pre-profits. Well, those earnings dates tend to move the stock quite a bit because we get an update on kind of some production numbers. We get an update on how the company is doing. Also, those updates tend to not really meet investor expectations. So you tend to see big swings in these stocks. So if you're in some of these names, if you're potentially wanting to be in some of these names, these are the dates that you want to keep in mind. Now, Tesla is going to report on January 26th, just 11 days from now. Ford shortly after on January 28th. GM is reporting on February 1st. Li Auto is the 25th. Nikola also reporting on the 25th. EVgo, which is a charging company, on March 3rd. March 3rd is actually a pretty big date because you got Lucid and Rivian also reporting on those dates as well. XPEV is reporting on March 8th. NIO the day after on 3/9. Plug Power, which I absolutely love to eviscerate here on the channel since their financials typically lend to that type of thing. They are reporting on 3/11. ChargePoint is reporting on 3/12. VW 3/15. And finally, Blink Charging out in April on April 8th. Just some things to keep in mind. Now, most of these companies are reporting pretty regular updates on their deliveries and their productions. And so sometimes these earnings can be telegraphed to a certain degree, especially when we're looking at a Tesla, a Ford, and GM. But they do tend to give product updates, and we are expecting a product update from Tesla as they move into their earnings report, again, just 11 days away. Now, speaking of Tesla, their Cybertruck arrival date might be pushed out into 2023. If you go to their website, it used to say that 2022 was the time of maybe initial production on that truck. It's looking more like 2023. We will give you an update that they're going to push those trucks out of the Texas facility as stated by their financial reports. We'll talk about the progress of that because that is key to Tesla being able to deliver those Cybertrucks at some point. Tesla is still facing challenges to launch operations in India. I thought this was interesting. The company is trying to break into India, but they have a 100% import duty on cars. And so that's incredible. So with this high import duty, what the intent essentially of the Indian government is, I think, to get Tesla to actually make these cars in that country. We'll see if that materializes. Obviously, as we'll go through things, Tesla is focused on Berlin and they're focused in Texas. It could be that they shift their focus to India after they get those new plants online. Now, Tesla's China-made car sales were up 34% month to month to 70,847 units. That's just in 1 month. And what we notice here on Tesla's financials is they have a greater of 450,000 car, this is kind of their annual capacity out of the Shanghai facility, and they just did 70,000 in 1 month. You annualize that out and you're getting to a number way over this 450,000. So the China facility is just pumping out these cars. Now, what we know is in this China facility, what Tesla does is they take those cars and they export them. They might export some to India, but they also export those into Europe as well. So when Giga Berlin gets online, we'll see if the Tesla numbers in Shanghai remain elevated because they might not need to export those cars out of the country of China. And so we'll get a really good sense of the actual true demand for these cars in the country of China, I think, when Giga Berlin gets online. Now, speaking of Giga Berlin, they received the green light. This is Tesla to build 2,000 Model Y bodies at the Gigafactory in Berlin ahead of the final approval. Now, what was interesting is they got approval to do 250 test vehicles, but Tesla told officials in Germany that it wasn't satisfied with the quality of those first initial vehicles, so they're going to do another test of about 2,000 vehicles. Now, they're allowed to do about 500 per week, so we're anticipating this 2,000 rollout of these test cars to actually take about a month because they're only going to be able to do about 500 of those per week. So 4 weeks takes you to about 2,000 vehicles. That takes us into the middle towards the end of February until the initial testing is over. We assume, and I'll have some evidence here, that after that initial testing, that the company Tesla will be able to start delivering these companies out of that factory to customers in Europe. Now, all signs are pointing to Tesla starting Giga Berlin deliveries in March. That is because some customers, this is just based on some anecdotal reports, that some customers are starting to see a March 2022 delivery date for their Model Y Tesla that they have on order through this facility. If you're not familiar, you order your car directly through Tesla, and then they give you a delivery date as the date comes near. And so some customers in close to the Berlin factory are starting to see a March delivery date. So I think Tesla's idea is they'll go through these 2,000 test units. Hopefully it goes better from a quality perspective than the first 250 did. They'll get that ironed out by the fourth batch of the 2,000. They'll get it all ironed out, and then sometime in March they'll receive approval to start pumping these cars out of here. Now, in terms of Texas, it looks like Model Y vehicles are expected to roll out of Austin, Texas in the next few weeks. And the reason why this is so important, the reason why we're so focused on these production facilities coming online, is the fact that right now, we talked about the current annual capacity for Tesla in their Fremont facility is close to 600,000 vehicles. In Shanghai, they say it's greater than 450. Obviously, we come off the heels of Tesla announcing back just last week that they delivered about 900,000, almost a million cars, rounded up, about a million cars over the last year. That is about the peak capacity that Tesla has. No matter what happens this year, the company could deliver right in that million range. But if you get Giga Berlin on track and then you get Texas, we're bolting on I would assume Berlin and Texas could do about what at least California does. I've been to the California facility to pick up my own Tesla, and I can imagine that they're not going to build a factory that is going to be able to do less. In fact, these are built from the ground up, whereas the one out here in Fremont, California was a retrofit of a previous factory. So my guess is the Berlin and Texas factories probably will not only be more efficient, but probably more productive from a producing an annual capacity perspective. My guess is Tesla could potentially get to well over 2 million vehicles. Now, we understand that Texas and the Berlin will not come online until potentially the end of Q1, maybe into Q2. So we won't get the full annual capacity of that, but more than likely, we're likely to see 500,000 cars out of those factories, and that will really bolster Tesla's bottom line and their production capabilities. Now, other companies in the EV space, Nikola rallied after landing a zero-emission distinction in California for their Tre semi-truck. This was just a distinction out of California, nothing necessarily too interesting, but what we've seen is actually Nikola's stock is rallying a little bit, okay? Not like a ton, but this stock was in the doldrums, and it is starting to form a little bit of a base. I think people confuse. I get some comments here on the channel on this video. I think some of you guys get the sense I'm like trying to pump these stocks, because I think you're used to YouTubers out there where if they talk about a stock, they're pumping it, they're buying it. This is all a part of the due diligence process, guys. We're not, just because we talk about a Nikola and we talk about it sometimes in a positive light, doesn't mean we're running out and buying this stock. Due diligence isn't watching a 10-minute video or 20-minute video or doing 30 minutes of internet research. Due diligence in this EV space is going to take years. And that's why we're doing this show. Due diligence on companies like Lucid is going to take years, not months, not days, not hours. If you're not willing to put in that time, you're not an investor, and the investor channel is not for you. We're putting in due diligence over a long period of time on this channel. That's the point of these videos. That's the point of the Saturday EV show. It's not to pump these stocks up that I don't like from a financial and a fundamental perspective, but we could like them in the future, and the due diligent process starts now. This is what professional investors do, okay? Lucid Group eyes manufacturing in Saudi Arabia as early as 2025. We'll look at this from a technical perspective, and obviously the Saudi government and the Saudis have a pretty big investment in Lucid, and if they can build some manufacturing plants there, I think that would definitely be beneficial for this company. And I just noticed there's a hard level of support underneath this stock, and I'm just wondering, if they're stepping in and buying this stock at that level that we'll have marked out here from a technical perspective. We'll talk about that in a moment. General Motors plans to launch an online car marketplace this spring. It's called Car Bravo. While the platform is expected to be largely facilitate sales to dealers, it is a place where GM could eventually cut into the market share of Carvana, CarMax, and Vroom. I thought that was interesting. Now, Honda and LG are partnering to build a $3.4 billion EV plant. This is according to rumors here in the United States. So what we are going to see before the Hondas of the world, the Toyotas, and certainly the GMs and the Fords, before they're able to catch up to Tesla, because I showed you Tesla's capabilities right now, right at the current moment, it's 1 million vehicles. This time next year, 12 months from now, my guess it's going to be in excess of 2 million vehicles before the Fords, the GMs, the Hondas have that capability. Well, guess what they're going to need to do? They're going to have to sink billions of dollars into battery plants, likely with a partner like an LG, maybe a Panasonic, or other battery companies out there. So as these start to produce, as these rumors start to become fruition, they start breaking ground on these types of things, you could see some progress from the EV space from some of these other companies. Now, from a technical segment of the show, look, Tesla's locked in this big blue uptrend. I've got this big blue line here representing the major uptrend that we are in with Tesla, and until you come down and test that line and really break through it, there's really no need for concern. We've got a green line here that marks out kind of the lows here. It's also a topping pattern that we made initially. This was kind of the previous all times with Tesla, and it's also marks where the lows are. As long as Tesla stays above this green line, well, look, the stock is in an uptrend, and I would not be worried at all from a technical perspective. NIO, slightly different story. We're making a series of lower highs on this one, and we're coming down to what I see as an area of support down here at about $27-ish per share. You break through this, and it's look out below. You're coming to the teens with NIO. If this level can hold, you're looking for a break above the previous highs, which are right here at about $43 per share. Until NIO can get above this $43 level, which is like $13 higher than where the stock is right now, I wouldn't be too excited about NIO. The price is compressing, and this is an area where you monitor it, but you're looking for a bounce above the previous highs. At this case, still a ways away for a NIO. Now, Li Auto, as we've talked about on last week's show, is just stuck in a range. This stock is stuck between about $26 and $36 per share. It's right smack dab in the middle of it as we speak at about $31 per share. As this stock walks up to 36, we'd expect it to come back down. As it comes down here to 26, we'd expect it to rebound. XPEV is still in this uptrend. It's actually the reverse of NIO. So if you flip the NIO chart, you get the XPEV chart. So you're making a series of higher lows here. This uptrend right here, we can actually make this, I think, a little thicker because this is a pretty solid uptrend right here. But we are reaching an area of resistance up here at about $56 per share. That's about $7 higher than where the stock is right now. I would expect as this stock gets up to this level, we get rejected and we come back down to this line. Now, in terms of the downside, you're really not too concerned unless you break below the previous lows. Right now, the previous low grouping is now down here at about $38 per share. That's about $11 lower than where the stock is. You get below here, that means this upward trend line is basically broken and the stock is down in a downtrend. But right now, we would expect this stock to go from about 49 up to the $55 range, likely, and then we'll see what happens from a technical perspective. GM did exactly what we thought it would do last week. The stock is reached an area of resistance up here at about $65, $66 per share, and it slowly got rejected. It came down to about the $61 per share. I would expect this stock to keep moving back. My guess is you might come back down in here to the middle of the range. You have an area right about here where there looks like some area of support here. We'll make that a thin line because it's kind of a thin line of support right here. I would expect this stock to kind of walk back. If you like GM, it's basically showing me this is in a sideways consolidation pattern, which is not necessarily a bad thing. You zoom the chart out on GM and you notice from 2013 to 2020, so for literally 7 years, this stock went sideways, okay? And so that's not necessarily a good thing, okay? Especially when you look at charts like Tesla and maybe mainly the high-flying tech stocks is out there. So you gave up a lot of ability to get some profits, but you did collect some dividends over at GM. And if you held or accumulated during these times, well, now you accumulated in the $30 range, and now the stock is basically doubled up into this $60 range. My guess is GM is likely in this. I'm not predicting like a 7 or 8 year sideways consolidation with GM again, but it looks like to me this stock wants to go sideways for the time being. Now, the chart that just keeps on giving is Ford. I mean, I wish I was in this stock. I wish I would have traded this, especially when it got above these previous highs here at 18. That was like the most obvious buy of all time. When you got above these highs, this stock is in such, I mean, look how steep this uptrend is. You've got to expect this thing to come back down to earth at some point, but Ford had such a compressed multiple, such a compressed valuation. This is what happens when the streets re-rates the stock. So sometimes you hear people saying, hey, Wall Street just re-rated the stock. That's what we're seeing with Ford. This stock got re-rated by Wall Street. Okay, they were like, I don't want, all along here for 6-7 years, they were like, I don't want to pay a big multiple for Ford. And then all of a sudden, it's like, oh, EVs came on the space and we re-rated this thing, and this thing has just gone parabolic. I wouldn't necessarily touch it unless it was from a trade momentum perspective. We're looking for pullbacks on this one. This uptrend right here is still intact, believe it or not, but we are way above it. As you can see, this chart is starting to look like Tesla. Believe it or not, Ford is starting to look like Tesla, but we would expect at some point the air to come out of the balloon a little bit and we retrace back to the line. Now, depending on how fast that is, it could be up here in the 20s. If it comes really quick, it could be back to below 20. We're monitoring that relatively closely. Now, on to Lucid. I talked about how I thought maybe the Saudis are supporting this stock because anytime it's gotten to about $35 per share, the stock's bounced, okay? And when you look at the other kind of pre-revenue, pre-profit EV stocks, they've completely broken down, like a Rivian. But this stock is in this uptrend. I'm going to increase the intensity of this line here. I'll change it to green, and we'll make it thick. This uptrend right here is intact, okay? Because you're making a set of lows, higher lows, kind of a blow-off top, a little bit like Ford, and then it retraced back to here. So that's kind of what we're looking with Ford, okay? This stock has gone parabolic. We'd expect it to retrace just like Lucid did, okay? Just like Tesla did as well. We showed that chart, did the same thing. So we'd expect to come back down to this line, but Lucid's in an uptrend, okay? It's making a series of higher lows, and until you get below the previous lows, which right now are 35, stock's in an uptrend. We would expect, though, as we come up to about $55, $57 per share, we'd expect this stock to get rejected up here, similar to like an XPEV. We'd expect the stock to get rejected. But as long as it doesn't get below the previous set of lows and it kind of hugs this trend line, which will continue to move up, the more this stock continues to go up, well, it wouldn't really matter. On the bullish side, you're looking to get above 57. That would kind of indicate a breakout. Now, on to Rivian. This stock is, we've got enough data here to kind of keep this on our one-day chart. This downtrend, I'm going to make this much thicker. This downtrend is intact, and we'll turn it red. Okay, so this downtrend that we're in, it is intact, and it is not giving up. So it's actually the reverse of Lucid. Lucid is locked in an uptrend. This is locked in a downtrend. And I thought maybe we could retrace back to this line, but we didn't. This stock is in a downtrend until it gets above the previous highs, which are up here at about $100 per share, which I think the odds of that, minus some kind of major news, some kind of major kind of pump and dump event, will send this stock lower. I would not want to touch this stock unless I was short it. Quite frankly, it looks terrible. That chart looks terrible, and the fundamentals, as we know, look terrible at that company as well. VW still in a compressing wedge. Okay, nothing really to see here. We're compressing. We're up back to the top of this, so I'll strengthen kind of our upper trend line. You can see here the price action is getting close to that. We'd actually expect this stock to rebound lower in the coming days. Now, if it's able to get above that, we're looking for it to get above the previous highs, which are right about here at about $300 per share. You get above that, that will tell you this downtrend is over, and now we're in an uptrend. So we'll see what happens with that stock. That was the EV Stock Show for the Saturday. Hopefully you guys enjoy your weekend. Good luck with your investments.